right. Hello, hello. Good morning. Good morning. How you doing, man?
I'm good, bro. Good afternoon from here.
Yes, yes, sir. Yes, sir. How you been? How you?
How are you doing?
I am doing good. I am doing good. How was your past week? How was your past trading week? Or just personally, how was it?
Having network issues here. Can
Can you
can you
hear me?
hear me now? Yeah, I can hear you
I can
now. I
hear.
can hear you.
Yeah, I can hear you really good. Can you hear me? Am I clear?
Yeah, I can hear you now. I can hear you now.
Okay, okay. That's good. That's good. All right. So yeah, I was saying, how was your week, man?
Oh, it was awesome. It was awesome. Even though I took only one trade, but that was losses too. So,
Mm-hmm.
but I'm glad. Yeah, I'm glad I didn't force trade. So that was losses too, but it's fine. So it's fine.
Right then. Yeah, well. So that's good, man. That's good. Personally, how was like? Did you have any other things you did like outside of trading or other
Oh,
projects you're working on?
yeah. Oh. Wow. So okay, that means you didn't trade during last week, right?
I did a few. I didn't do too many.
Okay, okay, okay. That was awesome. That was awesome. So last week mine was actually great, but like I said, it was losses. Even though at first I was having profits. So and last week was full of so many fundamentals. Trump telling Paul the court rates, something like that, and they started even talking about firing Paul. And you see that because of that, there was a major spike in gold because that was the asset I was trading gold. And so
Hmm.
because of that spike, I lost,
Yeah.
and but it is fine though. But at first I was having profits, true, but I lost during the spike, and it's fine. So I couldn't find any other entries. I had to stay out of the market and focus on some other things instead of forcing trades because of the losses you get.
Well, hey man, hey, like you said, loss is gonna come, but that's the mindset to have when you can't find anything. Just stay out. That's the best thing to do.
Yeah, yeah, exactly, exactly.
All right. So let's see. Today we'll be talking about the psychology behind stop losses. You know why we resist the discipline, right?
Oh,
So before I go in, let's all ask a few questions, right? So it says, how many of your biggest losses came from ignoring your stop, right? That's the first one. I can answer first. How many of my biggest losses came from ignoring my stop loss? 100%. All of my biggest losses came from ignoring my stop loss.
wow, wow.
Every single time I've had a huge loser, it was because I was convinced that I was correct and the market was wrong. So therefore I did not put on a stop loss. Or if I had a stop loss in mind, I let it continue to ride on. Like a lot of traders, I'll speak for myself. When I would trade, like getting into trading, starting out, I would say I have a mental stop loss, and that was my way of saying that, I get out when I choose to get out, but that was just my way of resisting putting on a stop loss, right? You
Yes,
know,
yes,
many people say, well, I have a mental stop loss. I'll get out at 10%, but then 10% comes and you're like, well, I'll just get out at 20%. 20% comes and you're like, well, I'll get out at negative 30. So the mental stop loss is, to me, is almost like traders trying to run away from discipline and knowing their strategy, they let losers tend to ride on
yeah,
longer and longer and longer, right?
exactly,
Um,
exactly.
so now, I'll ask you, how many of your biggest losses came from ignoring a stop loss?
Well, I would say that almost my biggest losses, like they don't really come from ignoring stop loss. I would say that because you see, at first, I don't really set mental stop loss because I have a system and I set my stop loss according to the market, like the average prices of the market. So I'll
Hmm.
really say that my losses actually don't come from me, widening my stop loss or trying to reduce it. So my stop losses, like my biggest loss, it just came from the actual trading, me thinking the thing would go my way. But unfortunately, I just entered the market, and the market did what it did. It knows best. So that is just what I want to say. So it was an initial state of my trading journey that I just used to place my stop loss anyhow. I'm going to be. I just don't know how to explain it, but I think you understand what I mean, right?
Yeah, I know what you mean. And saying I heard you say, you have a system where you automatically place the stop loss depending on the
Yeah.
market. How does that go? Like, how do you do that?
Okay. You know the ATR indicator, right?
Yes.
Okay, yes, I use ATR, average to range indicator, an illustration whereby I'm going to be I'm using the pips, and first of all, I'm going to be multiplying the pips by 1.5, and that is just the default formula. When I multiply by 1.5, I'm in the pips. Then, if I were to buy the market, what I'm going to be doing is I'm going to be adding the pip. I'm going to be subtracting the current price of the market from the peep, like from the actual result I got from multiplying the peep with 1.5. Then if I'm going to be selling the market, I'm going to be doing the opposite. And this has been working for me because now I'm not setting my stop loss based on what I'm thinking about. I'm just setting it based on the average prices of the market, even though it won't really work all the time. But that is just how I normally set my stop losses. You get?
That's all right. That's all right then. Hey, I like that. I like that system. It keeps you responsible,
Exactly.
keeps
Yeah,
everything right
exactly.
in front of you, so what you have to do. So,
Yes, exactly.
all right,
So
so
that is
so
yeah.
is that what was you about to say?
So I no, I was just trying to say that is just how I set my stop loss.
Okay, all right. So now let's go into, have you ever had trades where you didn't set a stop loss, or every trade you do you set one?
Yeah, I've got ways that I already set my stop loss, and those were sniper entries because to me I was just thinking, oh, it's gonna go my way.
Yeah.
So there was no need of setting stop loss, and those kinds of trades were the trades I'm risking my whole account. And
Yeah.
there were two that at most I lost in that trade. That was where I was blowing accounts, setting well, like trading without any stop loss. And I'll say it's really, really, really dangerous. So even though now I don't do that again.
Yes, yes, that is right. So why do we avoid using stop losses? Or could you say why you didn't use one? Or I'll just go here. Me,
Okay, okay,
myself.
okay, go right. I'm listening.
All right, me, myself, why sometimes they say traders don't set stop losses because one, we have a ego attachment to our trades. Two,
Exactly.
we are living hope versus reality. Some people call it hopium, having hope that something will always come back and it will bounce back, even if logic or our strategy says otherwise, right?
Yeah,
And
yeah.
we have this illusion of control. Like I was saying, we have this illusion that we are controlling the outcome of our destiny by not putting on a stop loss. Like by not putting on a stop loss, we are believing that the market will go in our favor because we did not put a stop loss. Some people
Mm.
feel like when they place a stop loss, it seems like price action loves to go straight to the stop loss, right?
Yes, yes,
So,
yes.
so we say, well, if I don't put a stop loss, that must mean that it's actually going to go in my favor. But it's actually giving the market all control over.
Exactly.
It's
Your
giving the
account.
market all control over the end result of your trade.
Exactly. Exactly.
So, how they say, ego attachment. We don't want to be wrong. We're placing a stop loss. Placing a stop loss is an admission that we might be wrong, right? some
Yes,
some
yes,
people say, well, I don't want to put on a stop loss because I know I'm not wrong, and if I do put a stop loss, that would mean that there has a potential that this trade might go wrong. And
yes,
if people have an ego attachment to their trades, they do not want to accept the fact that their trade can be wrong, right?
mm, yes, yes.
So that is why
Yeah.
some people either avoid to use a stop loss, or how they say, use a mental stop loss. But in my case, saying I have a mental stop loss is the exact same thing as avoiding using a stop loss, because again, there's the illusion that you have the control of your trades. But actually a stop loss gives you 100% control of how much you lose, how much
Exactly.
you can potentially lose. You get what I'm saying?
Exactly. I understand very well. I understand.
So putting on the stop loss already sets a drawdown limit that you are okay with, right?
Yes. Yes.
And
Exactly.
of course, I said again, we don't like to set those because we feel like we're already right, and
Yeah.
we don't need to set that because the market is not going to go that way.
Yeah.
Or even if it starts to go that way, we can either, some people like to move their stop loss, some people like to delete their stop loss, take it all the way out because they don't want to get out so quickly, or however the case may be. But you gotta let you know a stop loss is your friend. A
Yes.
stop
Exactly.
loss is here to help you not blow your account, right?
Exactly. 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 That's the mindset we need to possess. We need to
Oh,
always put up stop loss because by putting your stop loss, you've already like accepted the fact. Okay, if you hit my stop loss, that means I am wrong and I need to do better next time. That is that is it.
and that's it. And with that, like how we were talking about last week, still having the emotional connection to the outcome of our trades, feeling
Wow.
that if I am wrong on my trades, that was a bad trade. It still goes back to, okay, well, if my stop loss get hit, then I was wrong, or that was a bad trade. That's not always the case. Well,
Hmm.
just because it hit your stop loss, we need to be able to consider when your trade hit a stop loss, or the stop loss that you had a predetermined for. We need to start considering that as a good trade.
Hmm.
In our when
Wow.
we join, did we enter when we said we were going to enter? Yes. Did we get out when we said we were going to get out? Yes. That is
Wow.
still, you are still executing a good trade. Just because you
Great.
lost doesn't mean anything.
Wow. 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 That is powerful. This is powerful.
So
Wow.
because when you look at your strategy, every strategy again has losses and wins ingrained within the strategy. No
Yes.
strategy
Yes.
is 100%, right?
Exactly. Exactly. Exactly.
So when those losses come about and you hit your stop loss, if you followed your strategy, if you followed your rules, that is
You
still
pull it.
considered a good trade. And we
Exactly.
need to internalize that so that we can look at stop losses different.
Exactly. Exactly. Wow. That is powerful. That is powerful. More of like a being disciplined and following your
Yes,
strategy. Yes.
being it's just like being disciplined. Just like I don't here, like in basketball, people take shots. Like if you're wide open and you shoot the shot, just because you missed the shot doesn't mean it was a bad shot. You just missed it. It was a high quality shot. You're not going to make
Wow.
every single shot. But
Yes.
just because you missed the shot, or however the case may be, doesn't mean it
Yeah.
was a bad one. And when you get the opportunity again, you should take it again. You shouldn't hesitate, right?
Hmm. Wow. Yes. Yes. Exactly. Exactly. Wow. That
Okay.
is that is powerful. That is powerful.
And then, okay, so it's that, why do we ignore our own stop losses? Is there sometimes, like, there's some people who have mental stop losses, or stop losses that are in the market that don't automatically take them out, right?
Yes.
There
Yes.
are
Yes.
some stop losses like that.
Yes.
While I don't recommend them, I have also been in the shoes of a person who does ignore their own stop loss, right?
Hmm.
Again, we have this ego attachment to the trades. We have this emotional commitment. Once we're in a trade, we become biased.
Yes.
It's no longer, it's no longer analysis, is personal. Once
Yes.
I'm long in gold, I am looking for all the factors that support my bias that is going long, right?
Hmm.
I,
Yes. And there
I'm
go
not
come.
I am not looking at the other side and saying that, well, okay, well, these pips, they're looking bearish. They look like they're about to go down. They're looking like it's about, I need to short it or something, right? I'm not
Hmm.
looking at that. I'm looking at everything to make me feel good, kind of like pat my own ego, that the market will continue to go in the direction that I am in, right?
Wow. Yes.
If
Yes.
I'm wrong, even if it starts falling, I'm going to look at the jumps back up, or the retracements, to
Yes.
to to better, how I say, to better support my bias.
Your buy.
I'm
Your
not looking at the
yes.
I'm not looking at the pips that go down. I'm looking at the green pips that go up. See, yeah, that's
Exactly.
that's it right there. That's that emotional commitment we have to the trades. It is hard. It's almost like when people pick a side on something, when people pick a side, it's almost like you're committed to that side. But in trading, it's a lot different. In
Hmm.
trading, we have the ability to get out and get on a different side without being called a bandwagon or all
Oh,
this other stuff. A follower. But
yes.
in life, and we have this feeling that once you pick a side, you can't be flip flopping,
Hmm.
and that's we can't bring that philosophy to trading, because in trading, all trading is about is flip flopping. Is flip
Hmm.
flopping. You're
Wow.
short one
Wow.
day, you're long the next day, or you might be short this hour and long the next hour.
Wow.
You are not emotionally tied or physically tied to one direction in the market, right?
Wow. 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 That is why
So,
it's often
yeah.
said that we react to the market because we are not the owner of the market. We just have
Mhm.
to react towards the market. Yeah.
So like I said, we are reacting to what the market shows us. We are not like in some instances you might try to predict, try to see what's going on, but you can
Yeah.
never 100%
Yeah.
predict what's going to go on in the market, right?
Exactly.
Um,
Exactly. Market is not controlled by individuals like us.
No,
Yeah,
no.
and that is you need to always react towards it because you can come into the market like that was a trade I took, and okay, the one I took last week. So I was seeing a long on gold, but as time went on, I started seeing sell too. So I didn't say okay, let me just keep on buying. So I looked at it again. I discovered that oh, gold should be dropping. So and I sold gold, and it really
Mhm.
went well too. Even though I later got this spike that took me out of losses. But just like to support what you said now, we don't have to we don't always react towards market the same way it happens life in our real world. You might be saying I want to do this, I want to do that, I want to do this, I want to do that, but like you be supporting everything, like supporting the reason why you're gonna be doing that. But if we're to bring it in the market, it's not supposed to be done like that because there are sometimes you have to change now because of the movements of the market. So you need to react towards this current movement. So I think that is just what it's about, see, right?
Yes, that is correct. You have to
Okay.
react to what is going on in the market and not what you are projecting onto the market, right?
Oh,
A lot
oh.
of us,
And I got this one question for you. Like,
yeah,
how do you set your stop loss? Is it a mental stop loss?
no, no.
Oh,
To me, my stop loss is some if it fluctuates, but I'm in the process of trying to redefine my stop loss. How my stop
okay.
loss is now is that depending on the size of my average winner
Oh, wow.
is the size of my stop loss. Like if my average winner may be, let's say, a 50% or so like that. I don't know. Because
Wow.
I'm trading a little bit more riskier contracts and things. If my average win ratio is like 50%, I really don't want to go over 20% on my drawdown, right?
Oh, yeah, oh,
Um,
yeah.
I don't want to go over
Yeah.
20%. Really, really 15 or so like that. 15% drawdown.
Mm,
Um, but then again, there also has to be when you have when your stop loss is big like that. Some people's stop loss be 1 or 2, 3%. I don't know, but when your
mm,
stop loss is big, like 15 or 20%, you have to be consistent in your lot sizes or your contract sizes. You
yeah,
can't be inconsistent in your sizes. Therefore, if you are heavier, like if you have a bigger contract size on a trade and you
yeah,
lost 15% than on a trade where you won 50%, then it's going to balance itself out.
yes,
Um,
yeah,
in a sense of if I lose 15% if I'm risking, if I put $1,000 trade on and I
yeah,
lose 15%, all right, that's
yeah,
$150, right?
yeah. Yes, yes,
But
exactly.
if I put on a trade and it is a $300 trade and I make 50% on a $300 trade, I made $150.
Yes,
So if I take two trades, one $300, one $1,000, but on the $300 trade I won 50%, which is good. I made
mm-hmm.
150. But the next trade, I traded with overconfidence because of my last trade, and I put on $1,000.
Hmm.
That time I get out at 15%. I just wiped out all of my gains from
Hmm.
the last trade, right?
Exactly.
Even if it
Yeah,
was just 15%. My lot
Hmm.
sizes were different. So 15% of 1,000 is the same of 50% of 300, right?
Yes,
So
yes, exactly.
so even though we're not talking about that right now, even though we're not talking about contract sizes and things, of that nature and leveraging, I still do want to just throw in there that when you are dealing with stop losses and systematic trading and systematic trading, you got to understand that the sizes of your trades matter.
Yes,
The consistency of your trades matter, right?
they
The
matter a lot.
consistency
Yes,
of the sizes.
yes,
Um, like because it doesn't, like I said, one trade you can have a whole bunch, you can have a lot of risk on and you win, right? Or
yes.
the next trade you can have no risk on and you win. And the difference is it might average itself out, right?
Hmm.
So
Yeah,
another thing, it says, how we look at, the fear of missing the recovery. And I think a lot of traders go, feel this, you know,
hmm.
you don't want to get out of the trade because you are still convinced that you are right, right?
Yeah,
And you might say this, as soon as I get stopped out, it'll reverse and it will go in my favor. We talked about this last week, right?
yeah,
The
yeah,
fear of losing the recovery. As soon as I get out, it will go back in reverse and it'll go in my favor. And the
yeah,
reason we think like that is because it's happened to all of us. It's
yes,
happened to
yes,
all of us. We've gotten
yeah,
stopped out and the market goes in your favor, right?
yeah, yes.
It happens. It happens. It's just part of the game. But
Oh,
taking that fear and running with it and letting it control you and being like that, I'm not going to get out because last time I got out, it went in my favor. All
yeah.
that is doing is leading you to deeper and deeper losses, right?
Exactly, exactly.
And once it leads to deeper and deeper losses, if you didn't want to take the loss at $100 loss, what makes you think it'll be easier to take a $300 loss? What makes you think it'll be easier to take a $400 loss? The
Hmm. Hmm.
longer and longer you hold onto that trade, the more and more you are going to be unwilling to let it go.
Yes.
Right?
Oh,
So the
how have
easiest,
we understand it?
yeah, the quicker you let a loss go, I feel it's the quicker you let it go and the quicker you accept the loss, the
Yes.
easier it is to
You
let it go.
have that. Yes, yes.
And I think I wrote it down or I made a video and I was like, it's a lot better to get out of a trade and re-enter a trade than to hold on to a trade and wait for it to go back in your direction.
Yes, open it to reverse. Oh,
And especially now, like I said, with how volatile the markets are now, like how you said, Trump can make a tweet or something and the market spikes or the market
yes,
drops.
yes.
Um, somebody do something with the rates or something like that or tariffs, and the market spikes or jumps quickly without any, and by the time you know what's going on, the market's done already either win in your favor or against you.
Hmm. Yes, and that
And
was what happened to me.
that's what he said. That's what happened to you.
Yeah, that was what happened to me last week.
Like I said, it's as soon as you figure out why it's moving, it's already done made the move. And if you are in there, either like I said, either you just made a big gain or a big loss. One of the two. Either got stopped out or it went you got took profit. So
Yeah, yeah.
that's that's another thing. A lot of us are fearing the fear of missing out. FOMO.
Yeah.
FOMO can get us into a trade and keep us in a trade because
Hmm.
getting into a trade with FOMO, you don't want to miss the spike, so you get in, or
Yes.
you you don't want to get out of a trade because you missed the spike last time and you're like, I am not missing it this time. I am
Hmm.
not missing that spike. All of my friends doubled their account sizes and I wasn't in there right now. I'm still here, right?
Yes, yes.
So that's all, and a lot of times we have this desperation to be right. We trade our desires for profit for a desire to prove ourselves. A lot of
Exactly.
times we try to prove to ourselves that we are how do I
We're
say,
yeah, we are
like
professionals. We can do it.
we're professionals or that we're right or that we
Yeah.
know what we're doing, right?
Yes,
And
yes.
a loss, and to most people, when you have the wrong mindset to a loss, a loss only, it doesn't help you feel like a professional to some
Yes.
people. It makes
Yes.
you feel like a failure. It makes you feel like you don't know what you're doing. It makes you feel like an imposter
Mm,
because you lost. You know,
mm,
like I said, we still have that ego attachment to the losses. They make us, you know, to our results. Our
yes.
wins make us feel like we know what we're doing, give us
Mm,
confidence. But our losses, take our strip us of confidence. They strip us of our ego. All this other stuff, right?
yes.
So
Yes.
so that's why stop losses are very beneficial. But
Yes.
stop. A lot of people have the wrong perception of a stop loss.
Yes.
It's like, well, what is a stop loss? A stop loss is just it tells me if I'm right or wrong, right? No, you know how do you say it? A stop loss is a safety net. It is not a threat. It's like a seatbelt.
Yes.
It's
Yes. Yes.
annoying. Like people don't like to put seatbelts on in cars. People say, "Oh, it's annoying. It's annoying," right?
Yes.
But
Yes.
nobody likes a seatbelt until you crash. When you crash, that's when everybody likes the seatbelt, right?
Yes.
Like,
Exactly.
did you put your
Yes.
seatbelt on? When you get into a car, you should put your seatbelt on. Just like when you
Exactly.
get into a trade, you should put your stop loss
Of
on.
course. Yes. Yes.
It's when you do not put a stop loss on, you are basically saying, I know exactly what the market is going to do, and I do not need to protect myself. Right?
Yes. Yes. Yes.
A
Yes.
stop loss is you accepting the risk. A stop loss is
Exactly.
not you accepting a loss. It
Mm,
is you accepting the risk on what you're doing. Right?
yes. Yes. Yes.
Just because you put the stop loss on doesn't mean you think you're going to lose, but it means that you are accepting that what you are
Yes.
put on can be a loser.
Yes.
Right?
Yes.
It's like an act of self-respect saying I will not let one trade undo all of my progress.
Exactly. Exactly. Because
You know,
when you don't put stop loss, you are like risking your whole account.
yes, that is true. That is true. You are risking all of your account or all of the equity that you have into that one trade. You are
Yes.
risking it. Um
Yes.
because you're basically saying I don't have any you don't have a take profit, you don't have a stop loss, you're just in a trade. Your emotions are 100% in control. You don't know when you're getting out, you don't know when you don't know when you're getting out, you don't know when you're taking profit, you don't know anything. You're just in the trade.
That is bad, man. That is bad.
You don't know nothing. You're just in the trade. And
Yes.
if you feel that's a lot of things. When you have a mental stop loss, you
Yes.
are in the feeling. You
Hmm.
you feel when it's too much to bear, or you feel when you've made enough, right? So a lot of times, most people, when you are down negative, some people have the tendency to just stop looking at the market and wait
Hmm.
on it to come back. You don't have the guts to sit there and see yourself lose hundreds of dollars, so you walk away, you do something else. you know
Yes.
and Mark Douglas, in Trading in His Own, he talks about how a lot of us can become passive losers. We don't
Hmm.
have to do anything to keep on losing. All you have to
Hmm.
do is nothing. Once I put
Hmm.
on a trade, there is nothing else you have to do to keep losing.
Hmm.
The trade or the market can drain your account instantaneously or little by little over time,
Hmm.
depending on how the market wants to do you, right?
Hmm. Yes. I understand.
Like how you said,
Like
let's
I
say
can
you're,
understand.
yeah, yeah. How you was talking about how you were just talking about, in gold, it went
Yeah.
against you, you know? Imagine if you didn't have a stop loss, and
Hmm.
imagine if you were just eating with your family, right?
Yes.
Does the market care that you're eating with your family? No. The market is still going to go in the direction. It's not going to say, "Hey, let's wait on Favor. We have to wait on him. We have to wait on him to put his stop loss on and get out." No, that
That is hilarious.
that is the mindset of saying that if you can become a passive loser, once you are in a
Yeah.
trade, you don't have to do anything to keep on losing.
Hmm.
Nothing.
Yeah.
Once you
Yes.
click that button to buy or to sell, whatever the case may be, wherever you're going, you don't have to do anything else. The market
Yeah.
does the rest, right?
Yes. Exactly. Exactly.
So if the market never stops and if we weren't here to see the start of the stock market, like the total start of it, and
Yeah.
we probably won't be here to see the end of the stock market. The stock market will keep on going, and
Yeah.
equities and all that stuff will keep on going.
Keep
This
on going.
game that we are playing is endless, right?
Hmm.
We
Yes.
we're it never ends, and we don't see it start.
Hmm.
We only see it start when we want to. Our game or our trade starts on our time and it ends on our time, right?
Yeah. Yes.
But the market keeps on going. So
Yes.
if we don't have that and think about every single game that you like play, like not the stock market, like a game, play as a kid or play with your friends. Every
Yes.
game that you play has a start and an end, right?
Exactly. Yes. It-
When these events take place, this is when the game ends, right?
Yes.
But in trading, it is up to us when the game ends. It is up to us when the winning or the losing ends.
Hmm.
Therefore, that stop loss is actually like the end of the game or the end of the trade. It gets you out. It protects your capital for future trades.
Yes. Yes.
So, and it's like a business expense. No business is runs on 100% profit. No business.
Yes.
It
Exactly. No
In
business.
running a business, there are things that you have to buy. There are expenses that you have to pay.
Exactly.
Again, like I said last week, stop losses are the cost of just doing business in trading,
Hmm.
right? And
Hmm.
when they come around, you should be happy, right? You should be happy that
Yeah.
it hit your stop loss, not mad, you know,
Yeah.
because again, you stuck to your trading rules and it hit your stop loss. Be happy within yourself that you protected yourself from a total account annihilation, right?
Hmm. Yes.
Because a
Wow.
lot of a lot of accounts, like how they say, a lot of accounts are blown on one or two trades.
Yeah.
And I'll speak for myself. I have blown accounts, and it was not because I was not consistently winning.
Hmm.
No, my win ratio was good. 60 to 70% win ratio is good. But the
Wow.
30% that I'm losing was just so big that it did away with all of my profits, right?
Oh. Wow.
So
Oh.
so so those are when I would lose or blow my account because I would win, and I would go into the next trade with overconfidence, and
Oh.
I wouldn't want to accept the loss when it was small, uh, because of the last time I held on to a trade, it went in my favor. Or,
Hmm.
that's the thing about, not every winning trade is a good trade, right?
Exactly. Yes.
So it's all about understanding that stop losses are your friend, and it's like a safety net. It's like a seatbelt. It's not a threat. It's there to help you, and it's there
Yeah.
to help you in the long run, right?
Yeah. Yes.
Um,
Exactly.
if you are confident within yourself and you are optimistic within yourself that 10 years from now you will be a better trader, you will be a better analyst, you will be a better human being.
Yeah.
Why do we not want to save capital for that future person, right?
Hmm. Hmm.
When we are trading, we lose money that either we can't afford to lose right now, or
Yes.
that our future selves would be able to handle better than
Hmm.
ourselves right now.
Hmm.
So, like I said, a stop loss is basically, again, helping you. It's your friend,
Is your
and
friend in?
continue to saying that every time you get into a trade, put a stop loss. Doesn't matter.
Yeah.
Put it on.
Yeah.
I
Yes.
don't care if the last three trades hit your stop loss, and that is why some people stop putting it on.
Hmm.
And by some people, mean me. Early on in my trading days, I would put stop losses on. But then once one trade or two trades hit my stop loss, I'm like, man, I'm not putting the next one on the stop loss because I'm tired of getting stopped out. I'm tired of getting stopped out. I like to be in the trade. I don't like to put one on and 5 minutes later I get stopped out.
Get stopped out.
You know, I didn't want to accept that.
Yeah.
So what did I do in return? I just didn't put it on. If I don't put a stop loss on, I can't get stopped out, right?
Yeah.
And that goes back to that illusion of control where,
Hmm.
since I did not put my stop loss on, the market can't get me out. I'll get myself out when I choose fit, because once you're out, you're out.
Yes.
It is what it is. So, and how I say, and again, it goes back to, the sunk. Are you familiar with the sunk cost fallacy? Are you familiar with that?
Not really. Not really. I'm not familiar with that.
Okay, the sunk cost fallacy is basically saying that once people have, let me see, I got this written down right here. The
Okay.
sunk cost fallacy is a cost that has already been incurred and cannot be recovered. Basically,
Hmm.
saying that if you already have energy, time, and money invested into a certain thing, you are saying yourself is no point in getting out because I have already invested XYZ into this.
Hmm.
And a lot of time with trading, it influences how we make our decisions, right?
Yes.
We already lost $100. So why get out now?
Hmm.
Or we've been in this trade for X amount of minutes or hours. So why get out now? You know,
Hmm.
um, so the sunk cost fallacy. It's a psychological term in psychology, and it's not just to trading. It's to everything. Some people in relationships, some people
Yes.
say we've been together for 10 years, so why do we break up now, right?
Yes.
Or
Yes.
I'm already this far in, I have to finish it.
Yes.
So that's the same thing with trading. If you say, well, I'm already 20% in the red, why close it now? We feel that we've already put in X amount of time, money, and energy, emotional capital into this trade. So we feel like it's too late to get out.
Late. We are
Or
burnout.
yes, that's what the sunk cost fallacy is, right?
Yes.
Um, but the truth is, the market does not care how deep you are. Only you do. You know, the market doesn't know how long you've been in the trade. It doesn't know when you get in. It doesn't know when you got out. You do.
Yes.
So it's that thing that we have to we have to come to grasp with, right?
Hmm.
And
Yes.
you have you heard about lost aversion? You know what lost aversion is?
No, no, I'm not really familiar with that.
Okay. I got this, but I'm gonna try to put it into easier
Okay.
terms. Lost aversion is basically losses feel twice as painful as gains feel good.
Hmm.
So basically saying that if I lose $100, it feels
Yes.
worse than if I win $100. Like it feels worse than winning $100 feels good.
Hmm.
Right. So it's basically saying that when I lose something, it hurts me more to lose something than it makes me feel good to win something.
Wow.
So losing $100 does not feel like winning $100.
Yes.
Winning $200, the goodness of winning $200 most of the time can be counteracted by losing $100, and now you're back at this baseline.
Yes.
So it's like saying, first, loss aversion may arise because the downside risks are more threatening to survival than the upside opportunities.
Yeah, that is the thing.
So it says humans are theorized what is this, to be hardened for loss aversion due to asymmetric e what is this, evolutionary pressures, right? Or gains. So going all the way back to saying that, imagine somebody is hungry, right? It says the loss of food for days can cause death, right?
Yes.
But the gain of a day's food cannot add one more day of life
Hmm.
in the long
Ye-
run.
Yes.
So that goes back to, again, the lost aversion, that the pain feels twice as much as the joy of a gain does. It's it's
Hmm.
it's, it's kind of hard to wrap your head around, but when you look at it like that, that is why we fight so much harder to avoid the pain of a loss, right?
Hmm.
You
Yes.
When we win something, we don't feel as accomplished. Like sometimes we don't feel like
Very much
that.
success.
we just won $100. Hey, we're not thinking that, hey, that's $100 I did not have yesterday, right? That's $100 that I made in a span of how many minutes or hours or whatever the case may be,
Yes.
you know. But $100 loss, we take it on and we hold on to it for longer, right?
Hmm. Yes.
We let it overcome us.
Hmm.
But and where's it? Not the vibes. And then a lot of times we think about the times where have you ever been in a trade? Let me ask this: Have you ever been in a trade and
Yes.
you held on to it even when you wasn't supposed to, but it went back in your favor? Like
Like
maybe
like
call
pardon,
it luck.
pardon, please. I really did not get it. Get all. You asking if I've been in a trade where like, but I didn't hear all. Can you hear me now?
Yes, I can hear you.
I didn't really get your question.
Have you ever been in a trade where
Okay.
if that you stayed in it too long, meaning that if you didn't have a stop loss and you were lower than your stop loss and you should have got out but you didn't, but the market went back in your favor, like saying that you won a trade that you wasn't supposed to, or you won a trade by breaking your rules. Um if I can give an example, there's been
Okay.
times where I've held on to a trade and it went to negative 60%, right?
Hmm. Hmm.
But it went back in my favor and I won the trade. But
But that's not
during the
really a good.
time where I during the time where I held it, I was down big.
Wow.
So that's that thing where the recency bias where you are referring back to times where it went your way, or
Hmm.
you are referring back to times when the market went in
Hmm.
your direction without you, or the market took off without you, and we are not looking at the 5 times it didn't, right? We're
Yes.
looking at that one rare time where it did. So um that's that. But I know you said you have a system where you always put your stop losses on, and
Yeah.
it
Yeah.
always
Based.
goes with it.
Yes. Yes. Not mental stop loss.
Yeah, no mental stop loss. No mental
Yeah.
stop loss. We have to get that out of it. No mental stop loss. Um and again, it goes back to, switching our mindsets from a trader to a risk manager. Yes, we call ourselves traders sometimes, but at the end of the day, we are just risk managers. That's what we should be. We should be
Yeah.
managing our risk. You know,
Yeah.
um,
Not
a
just
trader
making.
feels like, yeah, a trader feels like, I just go on and place trades. Doesn't matter. That doesn't matter. No risk. But when you go into it as a risk manager, you say, how much can I afford to lose and still
Yeah.
be sharp tomorrow? Sometimes
Yes.
losses knock us off track and we are unsharp the next day. We're not clear. We're cloudy headed, right?
Yes.
So,
Yes.
and again, stop and I'll leave you off with this. A stop loss equals mental clarity.
Hmm.
When you have your stop loss, you know exactly when you need to get out,
Yes.
and it is very apparent to you. And
Hmm.
especially if you have a automatic stop loss where when price hits that limit right there, it gets you out
Yes.
immediately. That's one of the best things to have in trading. It gets you out immediately once you hit it.
Yes.
You don't touch it, you don't say nothing. A loss is a loss. You call a spade, right?
Yes. Yes.
That's it. So,
Wow.
like I said, that kind of concludes the, I'll say, the lesson or the check-in for this week. Do you have any like questions or things you want to talk about regarding that?
No, no, not really, not really. Like you've just cleared all my questions. Like your words are spot on. So I don't really have any more questions, and I'll confess I really learned a lot today. Such a powerful section.
All right, that's a good one. Well, like I said again, I appreciate you for coming in and talking with me, exploring this topic, and I'm looking forward to continuing to growing with you in the coming up future, man. Really.
You too, you too, you too, bro. You too.
So I
All
will
right.
I will say to you, I hope you have a great week. I'm looking forward to talking with you again next week and continuing this.
And you
and
too.
continue to go forward. And like I said, if you ever have any questions, you can always message me, or like I said, you can get with me, or however
All
the
right.
case may be, man.
All right. All right. All right. Thank you so much. And I forgot to ask you, how about your wife and your sons? Hope they are doing cool, right?
Yes, they are doing good. My wife, she's going, she's back at work now. Her feet's okay.
Oh,
My
wow.
son's good. I just got back from dropping him off at the daycare, so
Oh,
everybody's good, man. How about you and
wow.
your family?
Well, we're fine. We're doing cool. Wow. That's good to hear, man. Thank you so much for your time and for everything, for the explanations. I'm really, really glad. Thank you.
All right, thank you, man. All right, I'll talk to you later, man. Have a good day.
All right. All right. Bye.